Well, with the new U.S. president comes a flurry of new policies, and Donald Trump's are ambitious to say the least. But what does that mean for the public and private markets? Michael Craig, head of Asset Allocation and Derivatives with TD Asset Management, joins me now with his initial thoughts. I understand this is very much moving and will continue to move for at least 2 years as more comes out. But let me just start by saying, what do you think? We haven't seen a huge move in the markets on some of the things that have come out. So what are you noticing so far?
Yeah, and the broad equity markets have been pretty relaxed. Where you've seen some vol is in the dollar.
Yeah.
And I think that's where you're going to see the early days. That's where you're going to see the bulk of the volatilities in the currency markets as the tariff story continues to evolve. I think this is the kind of first salvo. There's more to come after tariffs, but I think that's where you're going to see the bulk of the volatility in the near term. And then you'll see as policies get rolled out, where there are areas of particular deregulation, what have you, you'll get other parts of the market waking up to that. But early on, it's all about currency. Let's
talk a bit about the currency. Explain this to me like I'm 5 years old. So where do you see this volatility playing out? Like, what's going to happen to the U.S. dollar as tariffs come into play?
Yeah, so loosely thinking, if the Americans put on a tariff against a particular country, I would expect to see their currency sell off in some amount that's somewhat equal to the amount of the tariff. And so if you see a 10% tariff on country X, 5 to 8% move in the currency over the preceding few months would be expected. And so early on, I expect to see some degree of tariffs. And so early on, dollar has rallied materially since Trump really was at head in the polls, has continued to do so. And I think for the first few quarters of his presidency, the dollar remains well supported and higher as we see tariff policy play out. But yesterday, as soon as there was reports about him backing off, you saw the dollar precipitously fall back up today. And so this is going to be that kind of whack-a-mole.
Yeah.
We're going to see the markets for the next few months.
Yeah, volatility, as you said. So this is where it's going to be so headline-driven in terms of what's happening. What about if we just pick a few things? Let's say energy. I mean, he talked about drill, baby, drill. He's talking about doing a ton of deregulation. How does that play out in the energy markets? How do you see that, over the next little while?
Energy companies are capital constrained and they're in IR constrained, and it all depends on where. It's fine to open up parts of federal land to drill, but if the price of oil isn't at a point where they can make money off it, you're not going to see that activity. I think deep down, Trump believes that you need cheap energy to have a strong economy. That's very much a fundamental belief of his, which does raise question why you'd be going after Canada, as we are the major exporter of oil to Canada, to the U.S., but that's beyond the point. But I think that this puts a bit of a cap on how high energy can go, but I don't believe that you're going to see this big push to drill at uneconomical prices. And so I think a lot of this is kind of headline. They have drawn down the Strategic Petroleum Reserve under Biden. Incredible. Like, essentially, they unwound 16 years of build in about 18 months. So there's going to be a new source of demand for energy as they refill the Strategic Petroleum Reserve. So that's going to be kind of a new source of demand near term. Our sense is that energy is probably higher, or oil prices are probably higher than lower over the next couple of years, irrespective of the fanfare that Trump's talking about in terms of drilling.
What about, and I know we're up against the clock here, but I asked you before we started, just China. You see that's one that's probably worth noting as well, too.
Yeah, China's running $1 trillion plus a trade surplus with the U.S. China's GDP is totally imbalanced. It's way too heavy on investment and not on consumption. And the Chinese Communist Party hasn't really put through policy to rebalance that economy. And right now, to make up for the lack of aggregate demand, because confidence is quite low in China, they're dumping goods. Currency is too strong, and dumping goods on foreign markets. This is absolutely the issue du jour. It hasn't been talked about a lot, but I believe over the next 6 months, you're going to see the Americans really take focus at China. I think they're trying to get their ducks in order in terms of North America, Europe, but then they'll see kind of a full court press on China. And it won't be, let's agree to tariffs, because, with the last round of tariffs, China essentially reneged. I think for this time around, you'll see tariffs, as negotiations start, but tariffs put in right away to put pressure on the Chinese to work to rebalancing that trading relationship.
I have two quick questions I want to fit in 2 minutes. So first one, it seems though there's a lot of tariffs and trade conversation, but again, I'll credit you. It seems that people are coming to the conclusion or understanding now it's more about national security than it is about trade. Is that something to watch as we move forward too?
So the two issues now are linked. It's two sides of the same coin. With Canada, the Americans there's a few issues. Fentanyl is one, and that's a problem here too, by the way. So, it's not a huge leap to actually look at us looking at that. And the second is our military commitments, particularly in terms of NATO, which we have been undershooting forever. And so I think for us to get going on trade, we're going to have to start focusing on those areas. That's where the grand bargain is. Now, Trump likes to poke and look for weaknesses and create bluster, but deep down, the root of this issue, I mean, the Canadian dollar is very cheap right now. Our currency is sold off 20% over the last 4 years, and so on the economic side, tariffs would hurt, but in the context of where the dollar has gone, that wouldn't be the end of the world. But it's those issues that I think need to be addressed for that trading relationship to kind of flourish, if you will. And I think that's where you'll see some movement over the next couple of quarters.